Falling window. Now falling window appears like this candles, and it is a continuation pattern. It means whatever the trend is like was going before these two candles will continue to like absorb the buys or sells. In this pattern, a window or a gap is created, and that's what makes falling window pattern a really important pattern. Because in this pattern, the high of the second candlestick is below the low of the first candlestick. So basically the complete green candle, the second candle, is below the first candle. Usually in a stock trading, it's not like this. The highs and lows usually overlaps. But here it doesn't. It creates a gap in between the low and the high of the second candle. This gap usually acts as a probable resistance and really strong resistance. Both candles acts as a free fall and a downtrend with force. And with the gap, it tells you that now the next candlestick won't be able to cross this gap. Now usually it may, like the third candle after these two candles might try to go back up and cross the high, cross the middle gap or fill the gap, because usually gaps are not left by the stock trading. But 8 out of 10 times it fails to fill it, and once it fails it goes down with like more force. So remember that, and if it falls further down, then even remember that the price will come back to fill the gap. So it will also give you an opportunity to make money on the rise back up if it falls further down. I will show you what I am trying to say in the next chapter on chart. That is how falling window occur and how the gap like helps you make money. Falling window. Now what happens in a falling window is, let's say right here, it opened at 45.18 and closed in minus at 45.01. The low is 44.65. Now this is a normal candle, but the next day it suddenly gap opens down. Now this low on this candle was 44.65. Let me zoom in for you. Right here, it was 44.65, but this high was 44.40. So it was still lower. And it closed even further lower at 43.90. Now this is a gap left. So this gap would be a resistance level. Now the price will be like, it will be really hard for it to cross this resistance level. And therefore this will act as your like support level. If you have short sold it, let's say here or here, you would know that price crossing this level will be exceptional. And if it crosses, then that would be your stop loss level. You could place the stop loss level at the high of this candle. Otherwise, it will be smooth right down. But now, as I told you in the rising window level, usually it will come back to fill the gap. 8 out of 10 times it will come back to fill the gap. But once there is like, let's say too many buyers have bought it somewhere here and somewhere here, then this fall is usually a trap for them. Now once it falls off, you won't let them come back and square it out. You would let it fall, and therefore due to margin calls, they will be selling. So it won't be like rising up immediately. It will be falling off so that the people on margin on leverage trading get stuck and they have to square them off due to margin call requirements. And therefore this is a hugely popular move for short sellers. Example, if I short sell, I like this kind of a move. I will check how many shares are like leverage shares, how many options are placed, and accordingly I might like short sell it with such a move that I could short sell with this gap, and from this day onward it will automatically fall, because due to margin calls people will be jumping in to get out of the stock, and that's my move down. Now once they are short sold, once they have sold it due to margin calls, the price will usually come back up. just to try to fill the gap, and it will fill, so it will fall off. And if you can look at it right here, it's the second time. This is a gap opening lower. This low is 43.47 and this high is 41.39. So there is a gap in between. The price will come back to try to fill the gap and will fail down. Now this is really important because gaps are usually stronger resistance level. But once you see that the fall is not like going lower and it's coming back up, then don't rely on this resistance level. Because usually what really happens is it comes back to fill the gap right here. It came back to fill it and then it fell off. So as a trend, it should go lower and make a lower low. This is what a trend is, making lower lows. So it should be making a lower low. If it goes up to try to fill the gap in between and doesn't make a lower low, then either it's going straight or going up. Now if it is going straight, then even you as a short seller, that position is not the favorable position. So straight trading is not your friend. And if it is not breaking a low, then it means a threat. Therefore, if you see something like this, then get out, book your profit, because in candlesticks, profits are everywhere. You don't need to worry about it. You would have made money right here, you would have made money right here. Or there would be any other pattern available which will make you money. So if you see something dangerous, example trend not going lower, right here the high is higher, then get out and don't try to play the game with a higher low. Because if you are considering, or if you have short sold stocks, then you want the price to go lower, not higher. And therefore if you see some threat, get out. Simple. Thank you.